Hello, hello. It's Big Cheds. Warm hello and a thank you. I'm glad you folks are here hanging out with me today. It is, I don't even know what day it is because it's a weird week with the holidays. Merry Christmas, Happy Hanukkah, Happy Holidays to everyone. It's 12/26/2024. Is it Wednesday? It's Thursday, folks. I'll get it right. This is part of the quick market update series on my YouTube, Cheds Trading. I teach professional technical analysis, Japanese candlestick theory, classical charting, and I try to make it simple for you. I take what's complicated and I try to make it simple. Start with the Masterclass technical analysis tutorial playlist. You must watch this. I have published 3 books. I'm working on a 4th book, Trading Journal, that will be out next year at some point. And most of my books are free in some form or another on my YouTube. I am, of course, Big Cheds on Twitter. I have a couple tweets that I want to discuss, some topics to talk about. And of course, I do a full market update for Bitcoin Live twice a week, no matter what. I even did one yesterday on Christmas. This is the best team in the world that studies crypto, so check that out. But these are quick updates, 10, 15 minutes. Gives me an opportunity to have a little fun. These are more open format. So while you're here, say hello in the chat. Let me know where you're from. Maybe drop a comment. It's a subscriber-only chat. So I would encourage you to subscribe so you can join the conversation and hit like as well if you like it. So folks, thank you for being here. So what do we think about Bitcoin? Oh, it's so bearish. Is it? Is it though? Right? Weekly chart is incredibly bullish. Okay, that's the backdrop. We'll start with the high time frame. And again, this kind of builds on the prior updates. I did one here Monday, and I'll do another one of these tomorrow here. You know, it's price above a rising EMA 8. I mean, that's uber bullish. That's incredibly bullish on the higher time frame. And there's been a lot of discussion about the daily MA50, right? The orange line. What's an MA versus an EMA? Well, and again, this is discussed in detail in the Masterclass webinar. EMA is an exponential moving average. I use the 8 and the 34. Exponential means the most recent candle has more price weighting versus a simple moving average where candles are equally weighted. And there's been a lot of discussion about this MA50 on Twitter. I put on a tweet. I'll talk about it. So let's just start. Let's start with that tweet. Actually, no. I'm going to go to the chat room first. Say hi to everybody. Mohammed, Patty, Tracy, Matt, David, Zul, good to see you folks. So now that I said hi, good to see everybody in the chat. So let's start out with this tweet. I think this will create some good content. I'm looking for educational content here. So I said this a little while ago, folks focusing on DMA. First of all, what does DMA mean? Well, daily MA50, right? If it was DEMA, it would be daily EMA, but a daily MA50 means it's a simple moving average, 50 period, equal weighted. People focusing on the daily MA50, and I'm going to remove everything else so we can make this point. I'll leave the 200 because that will help me make my point. So here's the MA50. People focusing on MA50. Oh, if Bitcoin loses MA50. I saw one from a guy he's pretty respectable. I mean, he's the guy he does really stage analysis. If it loses 50K, then we're going to 70 or whatever. You can't do that. You can't just overlook a really well-defined price level. Peak of the prior range has held every time. High wave candle, shock dip, hammer candle. Bulls have stepped in here every time. You can't tell yourself, here's the point. And I'm animated about this because it's ridiculous to me. You can't say because it loses. So folks focusing on the MA50, the missing for the forest for the trees. As long as 91 to 92K zone holds, it doesn't matter what happens with any moving average. Focus on supply and demand levels as defined by the price, not the technical analysts. We're over here, we're analyzing it, we're putting our moving averages on it. The price doesn't care. Bulls have stepped in every time and defended 91, 92K. It's a high and tight consolidation on the weekly. It's consolidating near the peak of the prior move, holding all the gains. So why doesn't it matter? Cheds, why? Why? No, if it loses to 50. All right, how about this? How about this? This is the 200. This is the MA200. This is the trend in classical charting, by the way, the simple moving average 200 period. If the price literally, so we're at 50, okay? If the price traded sideways for 150 days, right? What would that look like? I mean, it would be a lot of pain. People would be stressed out. I would think it would be awesome because that would allow for a move higher. But let's do it actually 150 days. I could do it by the weeks. Let me zoom out a little bit to make this a little bit better for the point I'm trying to make. Okay. So whatever it is, there we go. So let's say we went sideways for 150 days. All right, 140, 150, whatever. Okay, 150. What would happen? Okay, is this MA200? Where would it be? It would be here because it's a 200 period moving average. Would that be bearish if 150 days from now Bitcoin has not lost this zone? Like that's bearish. That's the whole point. Like it could literally trade sideways for 150 days. You would be so primed for a move to whatever number you want to put ahead above 150K. It doesn't matter. As long as, so it doesn't matter if it loses the 50, as long as it holds support. 91, 92K zone is support. That's what the price is defined. And all this focus on moving averages are not really support or resistance. You look at them to alert you to look at horizontal levels, to alert you to look for price interaction with a key level. It literally doesn't matter if it loses the 50, as long as bulls keep stepping in and defending here and rejecting lower prices in this zone. So they could literally do that and hold for 150 days at 91K. Would that be bearish? No. That would be super bullish. That would be uber, unbelievably super bullish. So this kind of drives me crazy when I see this, like, it's just nonsense TA. Oh, if we lose the MA50, that doesn't matter. You cannot tell yourself that if we lose this 50, we're just going to slice through support. It could happen, but you can't overlook key price levels as defined by the price. You have to let the price guide you. You have to listen to the price. You should not be over anticipating. Someone asked me a question, a great question though, from someone in the chat. What price level would indicate to you a multi-year bear market? You can't think that long term. You can't start to predict out, oh, it's a 2-year top, it's 3-year tops, whatever. There's no use in that. You're just guessing too much. At best, most of the time, you can maybe guess a couple days out with Bitcoin. All right. And that's why you continue to look at it. You continue to stay disciplined. You have to stay hip to hip with the price. Okay. You have to stay close. You have to stay in tune with the price, ear to the ground. Okay, stop predicting. That's why even with price targets, to me, and I've riffed on this a lot, are generally useless. Where you're projecting out so far, right? It's going to be here because it broke out. It's going to go to this level. Well, you know what's going to happen? You're going to convince yourself of a price level, and then you're going to start to ignore some information from the price. Okay, bulls have stepped in, and bulls have defended every time in this zone. After the massive breakout, it's a very clear price level. Focusing on the MA50 is a mistake. When you have this in classical charting, this is a mega level. You have time interval in between these attempts. Okay, a price distance, trough to peak. This is a big level. And even talking about the MA50, it's okay, but you can't overlook this level. I feel like I've been pretty clear about this point. Okay, this is fundamental. This is level 1 classical charting. Okay, so that's why I saw this tweet a couple people and it's starting to drive me crazy. Again, you could literally trade sideways for 150 days and tag the MA200, and that would not be bearish. Okay, that would be unbelievably bullish. Second tweet was about volume. Oh, the price is rising, but there's no volume. Where's the tweet? Oh, it's gone. Where's the tweet? Okay. Without a doubt, volume is the most misunderstood concept in all of TA. Exactly. When the price is trending, you don't need volume because there's already an imbalance in supply and demand. The most volume comes at the top and the bottom of the chart. If you look at all the major bottoms in this channel as the price has accelerated and consolidated, look at the volume here on this low, for example. Volume. When you've already got a trend, right? There's more buyers than sellers, or there's more sellers than buyers. You don't need volume because it's already trending. You have volume when the counter trend force steps in and tries to challenge the trend. Okay. I see another great question in the chat. I'll get to that in a second. So that's why you look for volume at the top and the bottom of a chart. You'd also like to see volume on a breakout to confirm the move or give you a little more confidence, but it's not as important. So I've seen people who've missed out on Bitcoin from when I went long at 18.5 and when most of you went long with me on Twitter because, oh, there's not enough volume. Like, your trend, you don't want volume. The counter trend force is looking for volume. And again, I go over this in great detail in the Masterclass tutorial playlist. I'm going to record another one. I'm planning on it. It's been a few years. I'm going to catch us up on price. It's not going to come quickly. I need to prepare for it. So these are really important topics. And so this is going to lead me to the next question from the chat was, do you only use those moving averages on the daily or lower time frames? Well, absolutely. So this leads to a great concept. So with time frames, when do you switch time frames? Well, classical charting. After volatility, and when the price is at a key level is when you drop to a lower time frame, number one. However, the longer the time frame, the stronger the signal, right? So I could drop to a 4-hour, I could drop to a 1 hour, I could go and hunt out some moving average cross. Like if I have a bias and I want to be bullish, I can go find whatever I want on whatever time frame I want. But that's dangerous. You don't want to do that. It's the same moving averages. Of course, I do not going to change moving averages based on the time frame, right? If I drop to 1 hour, I'm not going to all of a sudden use like the EMA 7 instead of the 8, right? With moving averages, and I talk about this in Trading Wisdom, and a lot of it's free, and the Masterclass tutorial is free. I give like a full lesson on moving averages. With a moving average, you need a trend to reverse. You need a trending market. So if the price is sideways and you have a moving average cross, it's useless because there's no trend. Everything is about the trend. It's about momentum, right? So moving averages, you want to have a trending market. You want to understand they're not really support and resistance. They should alert you as to where to look for a horizontal level. And the longer the time frame, the stronger the signal. Carlos says, pure wisdom. Thanks for putting it so simple. That's the whole point. I take professional TA and I try to make it simple for you folks. I struggled for so many years and people help me out. And this is why I do what I do. Rian says, hello from Warsaw. What is up? Happy holidays, Todd. Thank you as well. Moody Marv. Let's step back a little bit. Maybe we'll do a couple requests. We'll scan around the market. We'll look at a couple charts. We've got actually, we're wrapping up. It's been 12 minutes. So let me just quickly touch base on Ethereum, then I'm going to wrap. I'll do another quick update tomorrow. Again, I do full market updates on Bitcoin Live. That's not what these are. These are quick updates. I want to touch base with you folks. Please subscribe. Please hit like. So Ethereum needs to get back up above 3,500. I'd highlighted that in my report last night, anticipating a rejection. We have a little bit of a rollover here, big body, medium body doji. Overall, the wider trend is just fine. We talk about the price above the rising MA 200. It's been underperforming relative to Bitcoin, which has kind of given it a bad rap. But if Bitcoin was just rolling around in the mud, everybody would be talking about how good Ethereum looks, right? It's relative, right? It's because Bitcoin has been so strong. So, I think a big level of interest is going to be that low 3K area for Ethereum, 3,100, and flipping back up above 3,500, 3,550 would actually be a long trigger for Ethereum. So I pretty much don't care about the MA50 here. I do care about price interaction with the key level. I want to see 91, 92K zone hold. I've been saying that now for weeks. I've been doing this update here 5 days a week, here and there with the holiday and all that. But that's just keep it simple. Don't overcomplicate it, folks. Too many people are overcomplicating it. And that's why I'm here to try to make it simple. So thank you so much. I hope everybody's having an awesome holiday. Hit like, hit subscribe, soak up all that content on my YouTube channel, and stay well. Be kind to yourself, and have a great day. I will talk to you soon. Big Cheds out. Quick, I just want to say something. Teresa, thank you for that comment. Dude, thank you for everything you put out. The Trading Wisdom book was amazing, but also your cancer memoir. Thank you for saying that. Folks, my entire cancer memoir is free on my YouTube. I also have the audio book. Oh, I'm so glad to hear that. So not many people watch it or listen to it. So thank you, Teresa, and blessings to you and your family. I'm glad your mom is doing better. So, all right, folks, thank you so much. Big Cheds out.